It's time for bookkeeping, beer, and BS.
What are like the lowest hanging fruit, kind of like common mistakes that small business owners make on their taxes? Even now, and you might like carve this up into two things, I'll let you decide, but I feel like I talk to some small business owners who are still doing their own taxes, and I'm always like, whoa, like I'm scared. I'm scared for you. But even if they have a CPA, sometimes I'm not a tax person, and sometimes I like look at their stuff and I'm just like, oh boy, like I'm nervous about that too. What are like the low hanging fruit things that people should be checking the box on when they're thinking about small business taxes?
Yeah, this is actually fresh on my mind. So I think, not to just delve into vague generalities, but I think when you think about things that you're doing for bookkeeping and for tax purposes, trying to get the proper deductions, I think the biggest thing is knowing how you can substantiate some of the deductions that you take. Making sure that you're keeping ahead of changes, because some things change from year to year. And unless you're keeping up with it on a daily basis, I mean, there are things that you might miss. Are you
thinking like business deductions or personal deductions?
The
business.
I mean, a little bit of both. I mean, some kind of affect the other in terms of just deductibility. You have some of your pass-through entities, like you have your S Corp, you have your LLC where you're actually a sole proprietor, things of that sort, or partnerships. You have things that get reported on your 1040 as well. So even, I guess, first of all, it's important to kind of identify where you're at, what type of business entity structure you have. So one of the recurrent problems that I saw this tax season was that people weren't fully aware of their business structure and the implications it had on deductions. They thought
it's funny you said it. When like one of my intake questions when we sign up a new bookkeeping person is like, A, what do you use for payroll? B, how are you set up from a tax structure standpoint? And like, C, are you on payroll? And the amount of people that are just like, I think I'm this. And I was like, oh, that, like, I think you're going to want to know that. Like, there's some consequences to what that is.
Yeah.
Answer that question.
Yeah. And there was definitely one that particular situation that does come to mind in the form of an LLC. Sometimes people think, hey, I'm an LLC. I get taxed like an LLC. Either it goes through my 1040. When you're by yourself, it's considered disregarded entity. So it goes straight on a Schedule C.
Basically like personal taxes then, right? If you're just straight up LLC.
Exactly. Yes. But then you have other people that, even if you're an LLC, you can make a S Corp tax election, which with that come a whole variety of more complex tax matters that I would definitely have a bookkeeper or CPA by your side, making sure that you maximize deductibility on certain items and just abide by the compliance items that the IRS sets out.
Yeah. One of usually the reason why I'm asking when we do a bookkeeping demo, the reason why I'm asking, what do they use for payroll? How do they pay themselves? All that is to try to get to, are you taxed as an S Corp? And at least make them aware of, hey, there's potentially a bunch of payroll tax savings out here if you're taxed as an S Corp. So I try to like walk them through that. Now, I've been told, and you can kind of math this out, and I get the math of it, but it still flows through to personal. So I think the math is different for everybody, but just like a general rule would be, if your net income is over like 25,000, that's when it starts to maybe make sense to be taxed as an S Corp and start taking a wage. Would you agree with that? Is that it almost, when I say it out loud, I'm like, seems small, but maybe there's enough juice in that squeeze to make it worth doing the Form 2553 and doing the S Corp election thing?
That's funny. I've actually seen that number be closer to somewhere between 30 and 40,000, with more of a consensus around $40,000 mark in order for that to make sense, because you have all the added cost along with that. Again, you have to have solid bookkeeping. This isn't like the Schedule C where you just get a summary of expenses, summary of revenue. Take advantage of a couple of deductions along the way. It's very simple on your personal tax return. No, there's a whole different form that you have to fill out for the IRS, a whole separate tax return called the 1120S. So in that case, you want to be around that $40,000 mark because you have added costs along with it. So you have your filing fees and all that different stuff.
Hey, what's up, business nerd? Thank you so much for tuning in. I hope you learned a heck of a lot watching that episode. Do me a favor, subscribe right down here. And if you really like what you saw, you got more goods right here. Check out this one or check out this one and do this. Go subscribe. Appreciate you. Work smarter, work harder, go earn yourself some pride. Catch you on the next one.